How do you set up a new business? A lot of people overthink this, but I'm gonna break down the 5 steps you need to know to start your business off right. I'm Sorensen, let's build wealth. All right, step number 1, you need to make a sale. That's what you need to do first to start a business. You don't need to set up an LLC, you don't need a corporation. The first thing you need is a product or service that you have sold. Once you have done that, you're in business. Legally, as far as the IRS is concerned, now you have a legitimate business. Why does that matter? That matters because now I have expenses I can take against that business, which we're gonna come back to here in a second. Everyone overanalyzes this and thinks too far ahead about what they need to do without thinking, make a sale, have revenue in your account. Now, the second thing let's talk about is the name of your business. I'm not talking about the name of your LLC or corporation. Let's come back to your entity here in a second. But what is the name of your business? This is important for a couple of reasons. First, what is your URL? Is your name in your URL for your website? You may have a website down the road, and maybe you just reserve the domain now, you don't build out the website, but the name is gonna be important for determining what URL you're gonna wanna use and reserve. Second, do you wanna trademark that name? Is this a product you're gonna sell online or something that's gonna go nationwide? Do you wanna protect that name so no one else can use it and compete against you? So think about your name and make sure you have a name that's available, no one else is using, and that you can trademark. Now, some people are like, Matt, I'm gonna be a real estate agent. Okay, and I'm like, I'm just gonna be Matt Sorensen, real estate agent. Okay, don't stress as much. But some of you might be trying to brand a specific name or product, so start thinking about the name that you might be using, and remember, the URL or a potential trademark, if you're gonna go nationwide, is gonna be important in that name. Now, a couple things to do a quick Google search. Who else is using that name? You can also go to uspto.gov to search who is using that name. Is anyone trademarking that or has attempted to trademark that in the US? And then the last place is go to the state where you are located at or when you're conducting business to search that name and see if anyone else is using that name for an LLC or corporation. Now, if your name's available and let's say you want to trademark this and get that name set aside, what you have to do is first put that name into commerce. The easiest way to do that is, again, make a sale, but also be able to show that you're using it. Easiest way, get a website set up and get the name and branding on your website. That way you can show I put that into commerce across the US. Now, a trademark will take you maybe 3 to 6 months to get approval with the USPTO, but once you file the application, you have trademark pending. No one else can steal that name once you file the trademark. So if you're a business where the name is really critical to the brand, you should start going on a trademark now. Now, it might cost you $1,200 in legal fees. Our law firm does them for around $1,000. Then you got another $300 or $400 in filing fees to the USPTO to get it approved. Now, the third thing we need to talk about here is the tax benefits of business ownership. I want you to get tax write-offs for having this business. Now, remember, you're gonna have income coming in, and we get to offset that income for tax purposes with legitimate write-offs. But there's a lot of stuff you might not be thinking about that are write-offs. Your cell phone you're using in the business, the home office deduction for the area in your home you might be working out of at first. Of course, you might have an office front or a store location and you're expensing all of that. Your payrolls, your equipment, your materials, your training, all that stuff that's going into starting this business and getting it off the ground are expenses. So we want to use those expenses to offset any of this income we're going to start earning from the business, which lowers what we're actually taxed on at the end of the day and what you're going to owe the IRS. All right, now the fourth thing let's talk about is the entity you set up. A lot of people start with, do I need an LLC or do I need a corporation? I'm like, that's fourth on the list here. Slow down. Let's get a sale first. Let's think about the name you're going to use and get some branding around it. Let's make sure we understand the tax benefits and what I'm spending to go and create this income. Then let's talk about the LLC or corporation. Now, as a rule of thumb, if you don't know, do an LLC. Why do people say that? An LLC is the easiest entity to set up and maintain. And once you set up an LLC, you can convert it to an S corporation for tax purposes. 95% of small business owners are either an LLC or an S corporation. The reason for that is those are the most efficient entities to have, and they also minimize your taxes. Now, don't be a C corporation. C corporations are bad. You pay a corporate tax of 21%, and then you pay a individual tax again at 20%. So you're paying a total of 41% in federal income tax. If you're an LLC, the income passes through to you. There's no entity level tax. Or you're an S corp, the income passes through. There's no entity level tax. The max rate you'll pay is the max individual rate, which is 37%. Now, there is a tax strategy to do an S corporation once you're making more than $50,000 of net income. After everything I can expense in the business, I've made $50,000 or more. I may want to do an S corporation. I've got a video you can watch here that goes over using an S corporation to save on self-employment taxes. Not the purpose of today's video, but I want to throw those two entities out there, either using an LLC or S corporation. And remember, if you start with an LLC, you can convert to an S corporation for tax purposes later by doing what's called an S election. It's really easy. It's a one-page form to the IRS. Now, we're thinking about an entity. The other thing I want to mention here is the entity gives you asset protection. If something happens in the business, whether you did an LLC or an S corporation, that customer, that vendor, that person you engaged with, they have to sue the business. They have to sue the LLC. They don't sue you personally. So I get that asset protection of the LLC or corporation. Also, there's a more formal business structure. It makes you look a little bit more legit. There's some other benefits to using an entity, but I want you to think about the primary purposes of asset protection and also some tax savings once I'm making $50,000 or more by using an S corporation. All right, now coming in at number 5 here, you've got to start tracking income and expense. And I know what you're thinking, Matt, I didn't want to be an accountant. I wanted to own a business. Well, when you're starting a business, you need to learn accounting, okay? That is the language of business. It's dollars and cents, and it's actually going to be very good to you to know, where am I making income? You know, you got to track this just from a financial management standpoint or performance standpoint, but also because the IRS makes you do it, all right? So, and the easiest way to do this when you're starting out is set up a separate bank account. Have a separate bank account that you use to receive the income in your business, and also use that bank account, whether it's a checking account or a debit account associated with it, or even a credit card that you use solely for business, but use that account to pay all the expenses. I meet so many small business owners, whether it's side hustles or main hustles, their bookkeeping is atrocious. And the worst of them are the ones that put it all in their personal account and try and remember what it was, and they don't do bookkeeping. Then they're doing their tax return on April 15th of 2025, and they're trying to remember what they spent in their personal account in January of 2024 to do their 2024 tax return. That's freaking crazy. You're gonna miss out on tax deductions, and you're gonna overpay on taxes because you're being sloppy. So the easiest way to do it, separate bank account for the business to track the income and expense. That way you'll be able to dissect it easily and remember, oh yeah, that was a business expense. Oh yeah, that charge at Amazon, that was for materials or products or supplies in my business. And I know that because I only use that card for business expenses. Now, when we're talking about having a separate bank account and tracking your income and expense, I also want you to know, how do you pay yourself? Let's say you have an LLC. No S corporation. You got your bank account, you're receiving your income, paying your expenses, and you want to take money. All you need to do, transfer from the business account to your personal account, okay? Now, as the owner of the business, you're basically taking out the profit from the business. Now, a lot of people mistakenly think, hey Matt, I didn't make any money this year. I left it all in my business checking account. It's all in the LLC's account, and so there's no taxes, right? No. When you run your tax return, what the IRS cares about is, what did the business make and what expenses did the business have? So if you made $100,000 in the business and you had $60,000 in expenses, you have taxable income of $40,000, regardless of whether that money's set in the LLC bank account or you paid it to yourself. So don't think when you're paying yourself from your own company, that's causing tax. It's not. It's really what's your income and expense. The leftover is what's taxable income to you as the owner of the business. Now, if this turns into a main hustle, you're making good money, more than a few $1,000s a month, you might want to start doing estimated quarterly tax payments to the IRS. And that's a good thing to do because that's going to keep you ahead of the game and on track in terms of your taxes, so you don't get surprised at the end of the year or April 15th when you're actually filing your return. Now, for those of you that do an S corporation, it's a little different because you got to start doing a W-2. And in that scenario, you're also doing a quarterly payroll report to the IRS. So you want to maybe hire a payroll accountant or a CPA that can help you with your taxes and your payroll. A lot of small business owners love to use ADP. We love to use them as well, and they have great resources and tools for small business owners that are just S corps, even solopreneurs, to do a quick and easy payroll on a quarterly basis. Business ownership is one of the few accelerators when it comes to building wealth. You can accelerate and grow wealth faster starting a business. Now, there's also risks, of course, to it. A lot of businesses crash and burn. People spend a lot of time and money and make zero. So make sure you're taking those risks into account. But I hope these 5 tips help you get on the right path to starting your business. I'm Matt Sorensen. We'll see you next time.